All right, everyone, class is in session. Today, we are cracking the code on what it really costs to pull a single ounce of gold out of the ground, and, more importantly, how you can use that secret to invest like an absolute pro.
You know, this is probably the single most important question in all of gold investing. But for the longest time, the answer was a complete mystery, buried deep inside these super confusing financial reports. Understanding this one number, though, is the key to unlocking a company's true profitability. So let's dig in.
Here's our roadmap for today. We're going to start with the old, kind of broken way costs were reported. Then we'll get to the good stuff, the game-changing metric that brought some serious clarity to the industry. After that, I'll show you how to use it to figure out profit, compare the biggest players, and finally, build your very own investment strategy.
Okay, let's set the scene. Before 2013, the world of mining costs was basically the Wild West. I mean, every company was reporting their numbers differently, using metrics that were all over the place. For an investor, trying to make a fair apples-to-apples comparison between two companies, it was practically impossible.
See, the early metrics like cash cost only told a tiny piece of the story. They'd include stuff like direct mining expenses, but they left out huge, essential costs. Things like maintaining the equipment, corporate overhead, or even cleaning up the mine site when they were done. This gave investors a really distorted and, frankly, a dangerously optimistic view of a company's financial health.
But then, in 2013, the World Gold Council stepped in to bring some order to all that chaos. They introduced a new hero, a standardized benchmark designed for total transparency, all-in sustaining cost, or, as we all call it, AISC. And listen, this wasn't just another number. It was a revolution in financial reporting. AISC captures the complete financial reality of keeping a mine up and running. It became the new gold standard, giving investors a single, comparable number that shows the true all-in cost of producing 1 ounce of gold.
Think of it like this. Cash cost is just the price of the gas you put in your car. Yeah, it's an expense, but it's not the true cost of owning that car, right? AISC, on the other hand, is the total cost of ownership. It's the gas, the insurance, the regular maintenance, the new tires, those unexpected repairs. It's the whole picture.
The all-in part is what makes AISC so incredibly powerful. It captures everything, from the direct costs of labor and energy to the money spent just to keep the current machinery running. It even includes corporate overhead and the future costs of environmental cleanup. It is the full, unvarnished truth. And for investors who really want to get into the weeds, tools like MineStock Pro are specifically designed to help you break all these components down.
So why does this one number matter so much to you as an investor? Well, because AISC is the most direct line to a company's profitability. It is the absolute bedrock of a solid investment thesis in a gold miner. What this basically means is that a company's ability to control its AISC has a massive, outsized impact on its bottom line. You can think of AISC as your weather vane for both risk and reward. A low AISC means a company is tough. It can make money even if gold prices fall. A high AISC means its margins are thin and it's vulnerable.
All right, to put this into practice, let's use a real-world gold price. S&P Global projects that the average gold price in 2025 could be a pretty robust $3,436 per ounce. So let's call that the revenue side of our equation.
Now, the math from here is just beautifully simple. You take the current gold price, you subtract the company's all-in sustaining cost, and whatever's left over is their operating profit margin on every single ounce of gold they produce. That's it. This simple calculation is the core of fundamental analysis in the gold sector. Okay, enough with the theory. Let's see how this all plays out in the real world. It's time to apply this powerful knowledge to 3 of the biggest names in the game: Agnico Eagle, Barrick Gold, and Newmont. So here are the 2025 AISC numbers for these 3 titans. You've got Agnico Eagle coming in at an impressive $1,339 per ounce, Barrick Gold is guiding to around $1,510, and Newmont is at $1,566. Right off the bat, you can see a major difference in their cost structures. This is exactly the kind of critical data that makes tools like MineStock Pro so valuable for investors. When you see it visually like this, the difference is even more stark, isn't it? Agnico Eagle is the clear low-cost leader here, the disciplined valedictorian of the class. At a gold price over $3,400, that lower-cost base gives them a much wider, much healthier profit margin on every ounce. That's a massive competitive advantage. And, if you're interested in digging into these numbers yourself, MineStock Pro is actually running a special founders offer that's definitely worth checking out. But here's the thing. No company is an island.
not even the low-cost leaders. The entire mining industry is facing a pretty significant headwind right now, and that is rising costs across the board. This is a trend that affects everyone, and it's critical for investors to understand.
So these are the main culprits. Companies are spending more just to maintain their existing operations. Inflation is pushing up the cost of everything from labor to energy, and in some cases, higher gold prices actually lead to higher royalty payments to governments. And we're seeing this play out in the numbers, with companies forecasting that their costs are probably going to rise again in 2026.
So, the crucial point, the million-dollar question is, how do you take all this powerful information and turn it into a smart, actionable investment strategy? How do you use AISC to find the winners?
Here's your playbook. It's a simple but incredibly powerful framework. First, find the AISC. It's in every single quarterly report. Second, always remember that lower is better. It means wider margins, more resilience. Third, compare that number against its direct competitors to see who the real operational leader is. And finally, track the trend over time. Is their AISC going up or down? A falling AISC is a huge green flag. And for those who want to streamline this whole process, platforms like MineStock Pro are designed to put all this data right at your fingertips.
And there you have it. Seriously, congratulations. You now possess the single most important key to unlocking the true economics of the gold mining sector. And with their special founder offer, MineStock Pro makes that kind of professional-grade analysis accessible to pretty much everyone.
So this leaves us with a final thought to consider. In this environment of rising costs but high gold prices, which strategy are you going to back? Will you invest in the low-cost leaders like Agnico Eagle with their wide, dependable margins? Or do you bet on a higher-cost producer, hoping they can improve their efficiency and give you more leverage to the gold price? The choice is yours.
To put this knowledge into practice, analyze hundreds of miners, and get access to that professional-grade data, head over to MineStocksPro.app and claim their limited-time founder offer. Now go out there and invest smarter. Thanks for joining us.